Do you suffer from day trading action paralysis? This is a very common issue with new day traders, intermediate day traders alike. Have you noticed that you end up entering trades after the move? You end up FOMOing into the trade and then you get out for a loss when you should have entered earlier? We're gonna talk about some tips on how you can overcome day trading action paralysis. I've been day trading for almost 6 years now. And when I first started trading, one of the hardest things to do is to press the buy button in terms of getting in when your setup is calling for an entry. If you end up not buying the breakout, we got the MACD, we got our 8 EMA, we got our 21, we're all getting support, market's pushing up, we got volume there at open. We know that there's previous resistance right here, so we're entering here for a push up into this level. The problem for some people is they identify the setup, they have their overall strategy, and what happens? They end up not buying the breakout here, but instead they end up buying up here at the top and they end up getting stopped out on this move back down, and then the market moves higher. And I know this has happened to you because it's happened to me a million times as well. So it's obviously a very big issue if you're not entering at the right time because it's messing up your overall risk to reward. If you were buying down here at the 20s and it pushes up above the 30s, well, look, you're in the trade, you're in the green. At that point, you can put your stop loss break even, put your stop loss at the 80 EMA and ride this higher. But if you're entering at the 40s after this move happened there on the 3-minute candle, if you FOMO into it at the 40s, you get stopped out, well, then you're taking a loss that's just not needed. And it's all because of the execution paralysis that you had there. The first thing that I focus on every day with the trade is, number one, is this a good setup? Is this a setup that I have back tested? If you haven't back tested your strategy, if you haven't gone back and looked at 1,000 setups in the past with this type of indicator setup or whatever your overall strategy is, back testing is one of the most powerful things you can do, because if you back test, you can see like, look, 70% of the time when this setup is there on the chart, you know, I've got everything lined up. When this setup is lined up, this makes a move in the direction either up or down based on the setup. Having that back testing is going to be a huge key to really having confidence in getting rid of that action paralysis. Another common issue that causes the action paralysis is sizing. Everybody wants to know, like, what size should I trade? If you enter a trade and the first thing you're thinking about is losing money, you're already, oh my gosh, you know, I'm risking too much. Well, you probably are. You're using too much size. So if your size is much larger than what you're able to tolerate in terms of the loss, you're sizing up too much. If you take one contract, how does that make you feel? Emotionally, do you become stressed out the minute you take a trade, or are you confident and you're like, okay, look, I've entered my trade, I'm gonna look for this to make a move. Let's say, for example, I'm entering here at the 09s, looking for a push up above the 20s there. So I enter at the 09s with one contract. When I enter, how do I feel? Do I feel emotionally distressed, like, oh my gosh, I'm gonna lose? Or do I feel good? Like, hey, look, I've got my stop right here at the 07s, I'm risking 2, I feel good. The trade's going in my favor, everything's lining up. Ask yourself, like, do you feel emotionally stressed out, or do you feel confident in the trade? If you feel confident in the trade, well, then you're probably using the right size. If you're feeling less confident, you're feeling really stressed out, and you're like shaking, well, you're probably sized up too much. So size is really important. If you have too much size, you're creating too much emotional kind of stress on yourself, and you're gonna end up FOMO trading, you're gonna end up going on tilt. So size down. If you're feeling any type of emotion when you enter the trade, you're probably trading with the wrong size. Another tip to get over the paralysis is to understand, okay, look, every trade we go into, there's a chance that we could lose money. But if I go into the trade with a bracket order and I already have my stop loss set, and I know that no matter what, okay, look, my stop is set, I can only lose $200 on this trade. That's gonna make me much more able to enter a trade, because if I go into the trade already knowing what I'm risking and I have a plan, that's gonna get rid of a lot of that paralysis. I'm not gonna be as scared to enter at the right time because I know that I have a stop, I have a plan, and I'm ready to make a trade. So if I'm entering right here to buy this breakout, my stop's gonna be right below these 2 candles. So entering the trade, I already know, like, hey, I've got support there with the 80 EMA. I've got the bottom of those candles. Everything is setting up perfectly. We're bouncing. This is where I want to get long. And I know that my risk to reward here is, 3 to 1. So I'm looking to make $600, $800 on this trade for that move up into here. So I'm able to enter the trade with no emotion, not worried, not scared. So having the stop loss and already knowing what your risk to reward is before you enter the trade is going to make it that much easier to enter and then not have that paralysis. Another common issue that causes the action execution paralysis is having a few red days. What happens? We have a few red days, we get down on ourselves, we think there's no way we're gonna make money, like we're, oh my gosh, we always lose, oh, we're idiots. Like, we have that, right? We have those days where we just can't get through it. Like, we just can't make it happen. You're gonna have days where, like, no matter what you do, the market's gonna go against you, and that's part of trading. And you have to accept that. You're gonna have green days, you're gonna have red days. Once you accept that, and once you understand, like, look, like, hey, it's part of it. I take one loss, I take 2 wins. I take 1 loss, I take 3 wins. I take 1 loss, I take 4 wins. And you start to see that every trade is just a point, right? It's the idea of either you're gonna lose $200 or you're gonna make $500. So the more and more that you just understand that no matter what, you're gonna have red days and it's gonna happen, but every trade is a new trade. If you lost 3 trades in a row, that doesn't mean that your 4th trade is gonna be a loser. Now you got to ask yourself, are you over trading? Are you on tilt? If every single trade you're ending up losing on a day and you're buying the top, selling the low, and then you just have issues, that might be a good time to walk away. But in general, understanding that every trade is a totally new trade. If I lost $500 on Monday, well, Tuesday is a totally different day. It's going to be a new market, a new setup, and a overall new day to trade. So don't focus on what happened yesterday. And don't focus on what happened in the last trade. If you entered, you got stopped out, hey, that's part of the process. You got to build up that confidence. You got to stay in the game long enough that you can build up the confidence knowing that, look, on Friday, you know, I bought here at the 30s. Look, we went all the way up there to 920. I mean, that would have been a 100, almost, 90 point move there on 3 contracts. That's some serious money right there, my friends, some insanely serious money. So the thing is, like, if I see that I'm on the right side of the trend and I'm building myself, I'm getting better, I'm putting in the practice, I'm putting in the work, I have to build up that confidence to know, like, look, everyone else thought that on Friday the market was going to stay below 3,900. Well, look, 3,923 was the high at the end of the day. Am I a genius? No, but like, I should build up confidence knowing that I can see what's going on. Like, I can't predict obviously exactly what's going to happen, but I can get an overall idea, like, what's the trend doing? What is the market doing? Should I be more aggressive? Are we moving strong? Are we going straight up? Are we going straight down? Where's the VWAP? Asking all these questions and relying on myself to know, like, hey, I've put in the work, I put in the effort, I've got the confidence. And if you combine everything else, the sizing, the overall risk to reward, and your, confidence in this trade, you can get to a point where you can get over that execution paralysis. And being realistic and knowing that, like, hey, not every day is going to be $1 million day. Not every, probably never going to be like that. But just being realistic that this is a process. This is a marathon and not a sprint. If you want to make money in the market, you got to be patient. You got to wait for those really good setups that just scream, hey, buy, buy, buy. Like, those are the setups we're looking for. We're looking for the setups where we're just like, wow, like, this setup is too good to not buy, or this setup is too good to not short. The biggest things really come down to not having FOMO, building up that confidence, not holding on to your losers, and trying to really understand that every trade is a totally different trade. Every trade is a new trade. If you lose on the trade before, that does not change the reason that you would lose on the next trade. You just have to be patient. You have to have discipline, and you got to be understanding, and you got to understand that this is a marathon and not a race. If you guys want to tune in 9:15 a.m. live on YouTube every single morning, I'll see you guys there. Peace.